Dan here with Tradingology.com's trading room for March 26th on 2020. How's everybody doing this fine morning? Just watching. We definitely got some of the worst potential unemployment claims that came out, so we're a little surprised at this rally. Hey, good morning, Dave.
Good morning, everybody.
How we doing?
Good, good. What's happening?
Well, apparently the market likes people filing unemployment.
No, this is a little bit of a continuation of the rally over the last couple of days. I think what happened was they thought the number was going to be much bigger, but it's still early. It's going to be much bigger next time.
Right, for this week. Yeah.
Yeah. So we're still we're still in deep trouble here. I don't think this is going to end nicely or quickly.
This is what we call the bear market rally.
Yeah, and actually, I had an interesting chart sent to me over on Twitter. I could share with you. I'll put it in the Slack chat here. There's a couple of them, actually. I asked the guy for the source because he just sent me the chart, but I'm not sure how up to date it is. But we'll take a look at it.
I saw a really interesting one. Let me see if I can find that quick too. Morning, Voltaire. Morning, Andre. Good to see you.
Whoa. What the heck just happened there? Huh. All of a sudden, all my windows opened. What the heck? Everything is opening. What is this?
The Dow now and then. Oh, another comparison back to 1929. I gotcha.
Yeah, so I'm not sure exactly how up to date that is, but it looks like
I see 30,000 over here. We're comparing. We'll make
Yeah, he's got 20,000 right there. I think this was a day or two ago. So
okay, yeah, 20,087. I gotcha.
Right. So I don't know. He's. I mean, even though we weren't down on a percentage basis the same as 1929 at that first break, this is pretty close to what we've been talking about. So we may not get that 50,000 down at 15. That 50% decline down to 15,000. He's thinking that we're really, really close to where that bottom is, and we may have that 3 to 6 month period now starting now as a rebound before we continue lower. Morning, Ken, Mark, Voltaire, Andre. Good to see you guys.
Yeah, the other part that's interesting here is, like you say, how did they build this? Is it percentage accurate, or is it kind of like the profit charts turned into where you can squeeze one and not the other to make it look right?
Yeah, that's what I'm wondering. So I asked them for the source so I could figure out exactly what scale they were using and that kind of stuff, and the dates.
Sure.
Because we know the percentage is not the same. It was 50% in 1929, and it's 30% now.
Yeah, and if you look at it, this is basically zero on the old scale, right? Because we're 250, 150. This would be right around the zero line. This is definitely not zero.
Right, exactly. We're not even close to zero.
Yep. So yeah, you'd actually squeeze that up, and the blue line should be like here, but like we've been kind of seeing, right? But
yeah. Also, I believe that the 1929 high was above 400. It wasn't. Yeah, so that's not correct either.
Like you say, cite your sources.
Yeah. So anyway, and then the next one, there was another one in there I gave you.
Yeah.
That one is from Elliott Wave. I think it's probably more accurate. But at that time, you can see that bonds and stocks all topped pretty much at the same time, just like now, which is accurate. So bonds, topped it, they said a year before. So it's not quite the same time period, but you can see that the sell-off was as sharp as stocks were. Also, commodities, interestingly enough, as we know, topped in 2008, just as we were getting into the bottom of the financial crisis, and they topped in 2018, about 12 years before the 1929 peak. So we're almost exactly the same on commodities and bonds.
Interesting.
Yeah. If you look at the USCI chart going back, or DBC going back to 2008, you'll see almost the identical chart of commodities. So lots of similarities there. Obviously, the differences, and I've been thinking about this a lot. Technology has advanced significantly, but markets really don't change.
Sure.
Participants and markets, they don't change at all.
Good morning, Stephen. Good to see you.
Morning, Stephen.
Yeah, the question is going to be, as we look historically and everybody's making their correlations, is are we going to learn from history this time, which we still have not yet? And I don't even know if there's a way out of it with the system that we have built, right?
Right. I mean, this $2 trillion bill is probably just the beginning. They're going to have to do more, I think.
Yeah, I have a feeling we're going to see a minimum of double-digit capital T.
Yeah. Somebody on CNBC was mentioning this morning that in the 4 months or 6 months that they started doing QE in 2008, 2009, they did I forgot, it was close to $2 trillion, but they've done $2 trillion now in a week. So the time frame has been really compressed. And they thought it was just the beginning as well. We're probably going to see another $2 trillion in another maybe month or two, or maybe even shorter.
So did we ever see, or did it actually finally pass? I know they were still doing things late yesterday.
It did pass in the Senate. It's now pushed to the House. They're not going to meet until Friday morning for a voice vote. Probably it will pass. I mean, if it's gone through the Senate, the House is going to pass it. It should be on Trump's desk, by noon, and he said he would just sign it. So.
Gotcha. Yeah, I saw just a few reports, saying, hey, they're going to do this and they're taking off. It's like, well, we still kind of need you guys to do some work for us right now.
Yeah.
Yeah.
They've all left Washington, which is, it's like, what?
And for those that didn't hear, it's probably the majority of you, but I think half the United States are already in some type of stay-at-home, non-essential businesses. My state's starting one actually Friday night at midnight, where you can actually get in trouble. I don't think they're going to actually arrest people unless someone's being a jerk. But yeah, as of Friday at midnight here in my state of Minnesota, we are non-essential. Travel should not happen.
Yeah, DC is. I shared that tweet, that text with my son. DC is in lockdown. Non-essential businesses, everybody has to stay home. New York State has been declared a FEMA, that's a Federal Emergency Management area disaster.
Yeah, so you're telling me that. So does that mean anything specific for you?
Yeah, it means lots of money coming to the state. when they it's just like Katrina. After Katrina, it was a FEMA disaster area.
Sure.
They got tons and tons of money. That same thing is happening, which is interesting because most of the cases, I mean, I would say 99.9% of the cases are all in New York City, but because they're still part of New York State, the whole state gets the package.
Mm-hmm.
Yeah. But yeah, New York City is, I would not want to be there right now.
Oh, no, thank you. I saw a few pictures. People are starting to post pictures of whether it's New York or Las Vegas where it's completely shut down. It's a little interesting and eerie looking.
Yeah, Las Vegas has got to be a ghost town. I mean, there's so many people in Vegas. I mean, every time I've gone there, there's like 1 billion people.
Right, and now think about it as a ghost town and the light's not on.
Yeah. Yeah, it's pretty crazy.
So the internals are all positive. Obviously, we started out a little choppy, but we'll see how long they actually last there.
Yeah. The Fed said that they're going to come in and buy securities. So I wouldn't be surprised if they're buying up the Dow right now.
That's what I saw. I don't know if it was you or somebody else that talked about yesterday. It's like, yeah, that Dow move yesterday could have all been the Fed, because yesterday was one of the rare days where tech actually didn't rally with it. Tech closed out after that late sell-off negative. But that was quite the sell-off at the end of the day. I mean, look at the wick on this thing from yesterday.
Yeah.
We're almost back to where we recovered, so we'll see what happens when it gets up to there. And just looking at the clouds here, we just caught back up to the wrinkled cloud today on the major indexes on the daily charts.
Right.
It's been separated for a long time. So we'll see if we have another one of these. Bear market rally, boom.
Yeah, if we can get above that cloud, I'd be surprised, but we'll see. We'll see.
Voltaire.
At least we're not close to the percentage where the limit blocks are going to happen. So, if you're trading, just be cautious. But oh, we're up 7. Yeah, we're up 7 on the Dow.
Yeah, just crossed 700 mark there.
Do you remember the days when we used to be up like 40, 50 points?
Way back when?
Way back when, yeah.
Voltaire says they should have done it all together. If one is on lockdown, the other state should continue. Yeah, that's the fun part about the U.S. is the federal government usually only likes to do things in certain times. I absolutely understand what you're saying, but then they want to have states to have some of their own control too. So it's one of those interesting things that we have here.
Yeah. I mean, Americans are just so used to the total freedom. They mentioned that, we can really move around anywhere we want. But in Europe, the same. You can pretty much go anywhere you want typically. But in China, everybody has face recognition. They have surveillance cameras all over the place. They're starting to see a downward trajectory of the number of infections because they told everybody to stay inside, and if you don't, they're going to scoop you up right off the street.
Right.
So they don't have the freedoms we do, and it's kind of helped them get past that curve. But here, everybody likes to move around. I saw some stupid stuff. I mean, Jesus. It was spring break for colleges was just like a couple of weeks ago, right? And all these kids were out on the beach playing and stuff. It's like, oh my gosh, Good. Yeah, so we got, I think it's just so much stuff going on. It's just unbelievable. We got the package voted on and passed by the Senate last night. So much stuff in there. The final bill, I think, was about 898 pages or so. The draft was 1,400 pages. I guess they figured they could kind of squeeze things in, but they also took out a couple of things and made it a separate bill. So maybe
you were talking about that, where it was 2 bills instead of just 1.
Yeah, so it's 2 bills now, maybe even 3. There's something called Banking for All bill that's pending now, which is where the digital dollar language and the setting up of digital wallets at banks and member institutions comes from.
Yep. Okay.
That's in a separate bill, and some other stuff. But there's just so much money in there.
Just looking at that first one, I was like, holy cow, almost 1,500 pages is going to take an army to slew through this. So I can see why they busted it up into 2. Not that I typically read legislation, but yeah, that was a lot of stuff.
Yeah, I downloaded it and I did a search in Adobe just to see if
F is your friend, or Apple F for you probably.
Yeah, Adobe just I did a search for stimulus payments, It wasn't in there. So I knew that at that point they took it out and they put it in something else. The only thing that was in the original, the draft that I saw, which may not be the final one, but the draft I saw, the payments that were being made directly to individuals was just electronic payments. They didn't say anything about checks in that one. That may have stayed in the that might have been replaced and put back into the original bill. I don't know. It's kind of hard to say yet at this point. Oh, we're coming on the S&P 500 futures. We're coming right up against that one of the resistance areas.
Yeah, interesting. So you see the SPY actually hit it, and it's been acting, and it took that breakthrough. So it usually doesn't rip right through those.
Yeah, we had a couple of pauses there. Now we're going up through
the futures is coming through it. Yeah.
Oh boy, they're gonna push this thing. The Fed's in there buying.
They're trying to make headlines. Look at how good it is.
Oh yeah, look at everything's okay now. Actually, we're close to 22,000, which was like one of the target areas. Well, if we hit 15, we were going back to 22. What's 50% of the 30 to the, what was it, 18.5 that we hit? What's 50% of that? So I'll call it 29.95.
Because we made it down to 18.2.
18.2, okay. That's 11.7. You need to meet Bill or somebody.
I got him.
Okay. Plus the 18.2.
Yeah, we just broke over 22.070.
24. 24 is the resistance.
We were hoping it was going to be my line there, so we'll see where we close. You never know. This day is not over. It's just begun, right? We're not even open an hour, and we see how ridiculous these markets can be.
Well, it's not this. The bill's not going to go to the House until tomorrow morning, so we may see the rally today. We might see, after they pass it, maybe the decline tomorrow. I don't know. Either that, or the Fed said that they're going to print unlimited. They're going to have unlimited money. Did you see that interview with Kashkari?
It's amazing they actually say that.
Yeah.
I mean, we know it's true, but for them to actually just say it blatantly is...
Yeah. It's because most people don't know what that means. They think it's a good thing, you know?
Right. Oh, yeah, they'll just give me more money in my pocket.
Oh, yeah, don't worry about it. It's unlimited money. Like, that's good.
Yeah, you know unlimited money? Monopoly.
Yeah, exactly. I was talking to my wife this morning, and she goes, well, they're sending out all this money. Where are they getting the money from? I said, well, it's debt. I said, you know what? If I owed you some money and I didn't have any money to pay you, I go borrow it, and then I give it to you. And that's exactly what the government's doing. So the government floats the bonds, Fed buys them up, and gives it to me. That's all it is. They're paying me with debt.
Yep. And guess who has to repay that later? You and me.
Everybody. Yeah. I mean, we're going to be in debt, I think, for hundreds of years, really. I mean, if the United States is still around that long, we're in debt a very, very long time.
Let's see. They can't even make the numbers spin fast enough anymore.
Yeah, I noticed. Oh, look at the gold to the dollar to gold ratio went up to 13,000. It was 12. I did a video on YouTube. When was it? Like 2 days ago. It was under 12. It was under 13. So that's how fast they're printing.
Uh-huh.
At the end of December last year, it was around 6,800. So it's almost double.
It's actually okay. Yeah, I'm holding it up because I was doing that. Right over here is where I am.
Yep, if you hold it on top of that, it says it's the M2 money supply, which is checking accounts, savings accounts.
So here's the money creation going on. Here's where they're just making it appear out of thin air.
Yeah.
So we're almost at 3.5 trillion just base. We'll see how long it takes for that to say 7.
Yeah, for sure. It's going to happen.
Mark the days.
Yeah, I looked at this yesterday or the day before, and I looked at it and I said, damn, it looks like it's going faster.
Mm-hmm.
Well, going a lot faster than it used to.
Then if you look at the total, oh, where was it? There's the whole world too. Yeah, here we go. The U.S. or oh, yeah, here's everybody. Nobody's going up. The whole world's going down. It's not like there's one that's stronger than the other.
Right.
Every single one is losing GDP. Every single one is increasing in debt.
Yeah.
There's no safe place anywhere in the world to move it.
And we're right at the top of the list.
Yeah, we're number one. So that'll brighten your day for the weekend. Sorry.
Japan used to be number one, but
yeah, we caught them and passed them.
we passed them.
So let's see what we're moving here now. Rallied right up and it's busting right back down though. That resistance is definitely playing the game or playing a role. I was looking at the spreadsheet and I saw you called it out. I think it was in the real-time update service as well, where we finally had, I'll pull the spreadsheet over here. 2 days, I marked the peak here, where we actually had 2 binary columns fill out, which is what you need to see a turnaround. Look at the sharp drop off we went on the bell curve on the VA strategy for YMNQ, 40 to 23 to 6.
Wow.
And in 2 days, it was 7% to the positive. So we're definitely, if I pull over my daily chart on that, you can see it better. And I have to expand these so much because we're at such an extreme, it's ridiculous. But yeah, here's the daily chart and where we've actually made that bottom. I think it was right around 2.5%. If I update 1321.
Yeah, update that trend chart there. Oh, look at that chart.
I know. I had to readjust and lower my lower bound, just like the
yeah.
government. We're driving to zero bound.
Yeah.
1321. Is that all? Just one more? I must have been doing it real recently.
You've just been updating it, yeah. Oh, look at that. Jeez.
That's where it got to, or that's as of yesterday.
The waterfall.
Or here's a couple of these came back. So this was the bottom. Yeah, wow. And the other part that I'm actually updating again now because we've had such drastic moves, and I did put a note in there for anybody that downloaded it, is I was fixing these because we had such a drastic change that all the prices were off again. So if you're using this tab, either update it yourself, but this isn't all completely accurate, so we can have the right ratio still when we are going to jump back into these, because this would be a nice long, like you were saying, we could have a big long recovery. That could be a long-term trade for sure.
It could be. I think everybody was selling off the international stocks because they're the ones probably most affected by this worldwide phenomena, and then health crisis, and then so the tech stocks have been kind of eliminated from that initial sell-off and have held up pretty well, but the supply chain constraints and all the other things that are going on could really affect them. I don't know if you saw it, but I think probably with supply strain constraints, and there are some people going back to work in China right now. So some of the tech, at least in China, is going to be updated, whether or not they can actually ship out, because the fact that the surfaces of some items can be infected.
Mm-hmm.
So I don't know if they're going to have a delay of maybe 14 or 21 days after manufacturing and have those certified that they're corona free, beer wise.
Right.
So that could have a really huge effect. Oh, in other news, I don't know if you saw this or not, there's been a huge difference between the spot price and ETFs and gold futures.
Yep.
Just a huge spread on those. I mean, fairly unprecedented. I think it's the highest it's ever been, even in 2008, 2009. Deutsche Bank is reneging, well, not reneging, but they're delaying delivery of their physical gold stocks based on, I don't know what. They're just kind of saying, oh, we can't deliver. Sorry, guys.
Well, yeah, because all the mints are going to be closing, right? That's part of the problem.
That's part of the problem. That's right. But still, if they have to deliver on those contracts, I mean, they have no choice. And even a day delay on that is, I mean, it's just insane for what it means. Supply constraints. What are they going to do with those futures contracts?
Well, that's just the whole thing, right? It's just like currency. These are just paper. These are just IOUs. That's not physical, right? Just because I buy this doesn't guarantee I get it.
Well, the CME guarantees it, or CME guarantees.
Like you're saying, what happens when they can't fill that order?
They can't deliver. That's revolution time.
Right.
It is riot time.
Yep. I have a feeling this is not going to stay here very long.
Yeah.
And this may be the in-between between paper and digital.
Yeah.
I was having some thoughts of if they use that as the intermediary as well. Like if somehow that jumps, then they use it for backing for digital in the future. Because I think you need to have something, in my eyes, that is the backing instead of just faith and credit to make a system that work.
Yeah, that's absolutely right. That's the whole point of digital assets, is that you can enter into a contract and not have to trust the other person because it's digitally signed. So each ounce, or however they want to designate the delivery of the bar of gold, whether it's an ounce, half ounce, quarter ounce, or whatever, has a digital signature to it. And so you know it's available. If it's not, then it's not available. And the only way to do that, I think every gold bar, at least the ones issued by, I don't know, who are the major producers of gold these days?
Well, it's just the country mints, right? I don't know. I haven't done all that research personally because I'm not buying directly from them. But yeah, there's so many mints around the world that are creating coins and bars.
Right. So if they put each, I'm sure each gold bar has like a serial number or something, just like a dollar bill, right? So if they take that serial number, they put it on the blockchain, then you know you're going to be guaranteed that gold.
Right. Yeah. If you could back it, absolutely.
Yeah.
And then you can have that fluctuate for whatever crypto it is to whatever amount of gold. And that could become the global standard again, and no country will be benefited or not benefit from being a global reserve.
Yeah, exactly. We really need to get back to some sort of gold standard, because this floating currency and unlimited printing of money is
ridiculous.
Yeah, I think so what it does is it creates a confidence bubble of not a bubble, but what am I thinking of? It's just a decrease in confidence. People don't have any more faith. The whole reason the U.S. currency worked in the first place was because people had faith in it.
Yeah, you could go somewhere and get a piece of gold for it. Yeah.
Yeah, faith and credit.
Yep.
And so now, it's like I really don't know if I have either faith in the credit of the United States anymore.
Right.
Look at the RTY. Look at that flat top on that.
I was just checking that out. Yeah, they're all starting to.
It's completely flat.
It's almost like a limit.
Yeah. That's the weirdest thing I think I've ever seen. That's a 5-minute chart besides.
Mm-hmm.
The same thing on, IWM's the same.
You think there isn't a bunch of orders that are sitting right there and selling?
Yeah.
All right. Well, any last golden nuggets, Dave, or we want to call it a wrap? Or
I think we're good. If we do get a little bit of a rally here, don't trust it, guys. We could end up with another shorting opportunity, but the this kind of euphoria in the markets over the last couple of days is because of this bill. Once it passes, that euphoria may be sucked out of the market again. Just keep a heads up. We have seen a couple of days that are very, very close to triple T days, the true trend days. I haven't seen any that are tradable yet because the market has been either up or down 1,000 points or more. And when you get to those points, there's not really much room left to trade in. But I think we're going to still see a couple of days where maybe we're only down a couple hundred points and we've got a true trend day. That's the time to jump in. Not when they're up or down 1,000 points at the open. But I think we're still going to have an opportunity. The same thing happened in 2008 in the fall. We had huge volatility, up 700, down 800, and we had a lot of volatility. But once we got out of that volatility period, we had low volatility, but the market continued to go lower. That's the time when you want to start shorting stuff.
That'd be a beautiful one. Yeah. If we could start just that slow crawl down.
Yeah. That's the time to start shorting stuff. That'll be less volatility. And this volatility, even pros are really getting chopped up. I mean, look at that. We just dropped 50 points, 50-point handles on the S&P 500 futures. Now we're up another 20, 30 points. So just be very, very careful. That's all I got.
Sounds good, Dave. As always, we appreciate your time and everything.
Yeah.
And I appreciate you guys. It's not just all of us too, share your ideas in the Slack channel. We're all in this together. If something seems to, which I know Isaac is coming out with a way of trading. So we'll look for that too coming. And you guys have a safe weekend out there. And I believe next Tuesday we'll be back at the same times.
Okay, guys. Have a great weekend. We'll see you then. Bye, Dan.
See you, Dave.